Celsius just reported a terrible or not so good quarter. The company missed Wall Street's revenue expectations, earnings missed, margins fell, and the original Celsius brand, the flagship brand, the brand that the entire company was founded on, the revenue declined almost 12%, and of course, the stock crashed. And then less than 24 hours after that, the founder of Rockstar Energy had purchased roughly 12 million Celsius shares, giving him about 4.7% of the company, and reportedly wants to replace the current CEO, who's been there for a long time, like over a decade. The stock immediately reversed course on that. People were excited about the news. And so what exactly is happening here, and what are my thoughts on Celsius, which I've long been bullish, but hope deferred does make the heart sick, and we've been waiting for a while here. Is Celsius becoming a mature beverage company that's run out of growth? Is management destroying the original brand while Alani Nu covers up all the damage? Or is this simply just a messy transition quarter for the company again that is becoming much larger, more diversified, and potentially far more powerful? I have gone through the earnings release, the numbers, the earnings call, and my opinion is falling probably somewhere in the middle. This absolutely was a disappointing quarter, and we can't deny that. But I do not believe that the Celsius growth story is completely dead. And the biggest reason is Alani. Before I get into it, I own Celsius stock, so I'm obviously a little biased, and you need to do your own homework so you have your own conviction. And I'm not going to pretend that everything is wonderful just because I own this company. There are some real problems here with Celsius. The original Celsius brand has lost momentum. Promotions are pressuring margins, and Rockstar is still declining, and the management has made some pretty obvious execution mistakes. But there are also parts of the business that are performing incredibly well, and I think the market may be looking at Celsius as though it is a single branded company, like only Celsius. And it's just not that anymore. Celsius Holdings now owns 3 distinct energy drinks. They own Celsius, they own Alani Nu, and they own Rockstar. And together their portfolio controls approximately 20% of the US energy drink category, which is like pretty impressive. So let's start with the headline numbers. Celsius reported the second quarter revenue of approximately $818 million, and that was up 11% from the prior year. So the company technically delivered record second quarter revenue, but Wall Street expected $870 million, depending on the estimate source. And that means that Celsius missed on revenue expectations by approximately 52 million to 55 million, or about 6%. And when companies miss, Wall Street punishes. And then there was adjusted earnings, which came in at 36 cents per share compared with the expectation of 41 cents. Again, Wall Street punishes. And honestly, like, that's kind of like why I hate expectations, but that's a video for another day. Gross margins fell from 51.5% to 48.1%, and we hate to see gross margins falling. We want to see them going the other way. GAAP net income declined 45% to 55 million, while GAAP diluted earnings fell from 33 cents to 14 cents per share. So this, unfortunately, was not a case where Celsius beat expectations and then the market simply misunderstood the quarter. The company missed, profitability weakened, and the expectations will likely come down. And these are legitimate concerns. Like, these are legitimately negative things that are happening within Celsius. But for me, as a long investor, and I did buy more shares this morning, actually. I was gonna say yesterday, but it was this morning. When we separate the 3 brands, for me personally, the picture becomes much more interesting. The biggest problem, in my opinion, is the Celsius brand itself. The Celsius brand revenue declined 11.7% year over year during the quarter. At retail, however, Celsius sales declined only 2%. The difference is important because shipments and scanner data measure different things. Reported revenue tells how much product Celsius shipped into the distribution system after trade promotions, discount, and other deductions. Retail scanner data tells us what consumers actually purchased at the register. Neither number should be ignored. An almost 12% revenue decline is serious, but consumer purchases falling 2% is very different from demand collapsing by 12%. Management explained that approximately half of the gap between shipments and retail sales were caused by distributor inventory rebalancing. As Celsius removed products from the distribution system, distributors reduced the inventory they were building. That meant that they ordered less product from Celsius than consumers were actually purchasing during the quarter. The rest of the gap came primarily from heavier promotional spending, which is a little worrisome, channel mix, and weakness in the club channel. So yes, the underlying consumer trend is better than reported revenue decline suggests, but there was still a decline. And we're not going to sugarcoat it. Retail sales were still down. The core brand is not currently growing. And management expects the third quarter to look similar to the quarter we just had. The brand gradually begins returning to growth later in the year and into 2027. Again, hope deferred makes a heart sick, and I think that's what investors are feeling with this brand. And that makes the next 2 quarters very important. So what did management get wrong here? Management decided to remove weaker Celsius products and reduce the number of SKUs in the distribution system. If 10 products are sitting on the shelf, but only 3 of them barely sell, removing these weaker products should free up the space for the flavors that are more popular. But the problem was the timing, according to the CEO. Celsius removed the weaker SKUs immediately, but the better shelf space it expected to receive in return, including coolers, cold vaults, placement, permanent displays, took longer to arrive. Management also deliberately reduced innovation while they were integrating Alani and Rockstar into the Celsius family. So Celsius removed products first, waited longer than expected to replace said products on the shelf space, and did not have enough new products launching to fill the gap. Management dropped the ball, but thankfully the CEO did admit that. He said in plain language that Celsius cut too many SKUs and that looking back, he would have handled the rationalization more lightly. I do appreciate the admission, but I just wish that he had maybe admitted it, like owned it a little bit more. It was kind of like a soft admission. I don't know. It was just the tone. But investors should still hold management accountable because this was a self-inflicted mistake. The good news is that there are some early signs that the strategy itself may eventually work. Celsius had approximately fewer points of distribution. Sales per point of distribution increased 16% from the first quarter to the second quarter. So what does that mean? In simple terms, Celsius had fewer products and fewer placements, but the products that remained became more productive. That's good news. Fizz-free sales also increased more than 20% sequentially, and international Celsius revenue grew 10% during the quarter. Those are encouraging signals. But increased productivity does not completely offset losing distribution. Management now has to convert that productivity into more cold space, better placement, and actual brand growth. But now we get to the company that I am most bullish on, and that is Alani Nu. Alani generated approximately $364 million in the second quarter revenue, up roughly 21% year over year. But retail sales grew almost 56%. It is the star of the company. No one can deny that now. Alani now holds approximately 8.7% of the US energy drink market compared with the 9.5% for the original Celsius brand. Like Alani's even coming for Celsius. So think about that. At retail, Alani is already approaching the size of the flagship brand, and it is still growing more than 50%. Like, this should be super exciting to investors. This is not a tiny acquisition helping around the edges. Alani has become one of the company's 2 major brands, and I will say it will become the brand of Celsius in not too long. The difference between Alani's 21% reported growth and its 56% retail growth was partly caused by the move into Pepsi's direct store delivery system, higher potential allowances, product mix, inventory timing, and the discontinuation of certain non-energy products. Excluding Canada and the discontinued non-ready-to-drink business, Alani's gross revenue was approximately 39%. So no matter which number you use, consumer demand is clearly strong. And my bullish opinion was always on Alani for this company. Management said the purple cotton candy quickly became Alani's best performing new flavor, which was obvious if you watched anything on TikTok. The limited time flavors create excitement, they attract new customers, and they give people reason to keep checking in the brand. And I am telling you, these new flavors, girls go crazy for them. Like, they buy cases and cases and cases. They cannot consume enough. But what I like most is that Celsius is moving the best performing flavors into Alani's permanent core lineup. And that matters because limited time products can create short bursts of growth, but a strong core portfolio creates repeatable revenue, which is what we want. But I do really want to see them come out continuing with these like short brands because that keeps that population, that demographic going. Management said it often acts as a first entry into the energy drink category. So they start with Alani. Hopefully they stay with Alani, but maybe they try other things as long as it's Celsius or Rockstar. That makes Alani more than another flavor of Celsius. It reaches a different consumer and essentially expands the total addressable market, or the TAM, which is also amazing. Also why I'm bullish if we can bring in a new group of people into the energy drink market. Management says Alani remains unpenetrated in several channels and is considering international launches beginning in 2027. To me, Alani alone gives Celsius a credible long-term growth engine, even if the original brand Celsius takes time to recover. Now they do need to recover it. They can't let it keep declining, but Alani's going to be the star. And then briefly, we have Rockstar. I am bullish Rockstar. I hope they can turn it around. Now, obviously, Rockstar mainly hits the male demographic. 18 to 25-year-old is what the CEO said. That's okay. Let's go for it. Let's take out Monster. Rockstar contributed approximately $66.5 million in revenue, but retail sales did decline 13%, and its US market share fell approximately 1.9%. So Rockstar is kind of like the weakest link here, but we knew that when they got it from Pepsi, so that's okay. Celsius says it completed the Rockstar integration in June within the 9-month timeline that it originally provided, so that's great. Management says it's seeing early velocity improvements in certain markets with Rockstar, but this is still a turnaround story, and turnarounds are hard, and we do not have enough evidence to even declare that we might get a victory here. The way I look at Rockstar is this: I am not buying Celsius because I expect Rockstar to become Alani. I am looking at Rockstar as an optional upside. If Celsius can simply stabilize the brand, improve its margins, stop the market share losses, that would already be valuable. Personally, and I saw someone say this on X, so it's not my idea, but what they need to do with Rockstar is increase the caffeine in it. Redo the packaging and increase the caffeine. So if anyone can get that to the management, if Rockstar could just be like Ghost, like just extremely high caffeine, we could maybe see a turnaround there. If the company can actually return Rockstar to growth, that could become a meaningful leg for the company, especially with international expansion. But until the retail numbers improve, hope is not evidence. Because Rockstar does need to prove itself here, or maybe Celsius needs to prove that it can turn around Rockstar. The Rockstar situation did become interesting after earnings though, because Russ, also known as Russ Savage, I guess that's like a nickname for him, founded Rockstar Energy and sold it to PepsiCo in 2020 for $3.85 billion. And he reportedly told CNBC that he now controls more than 12 million shares of Celsius, representing approximately 4.7% of the company. He reportedly called for CEO John and other senior executives to be replaced and suggested that he could run the company himself. Now, there has been a little bit of a market turn up. The CEO has gone, I think, a few others, which I'm happy about. So we'll see how that goes. The market loved the possibility of change, and the Celsius shares bounced sharply on this announcement. The initial earnings collapse was kind of rescued by Russ coming in saying he owned almost 5% of the company. I understand why Russ sees an opportunity with Celsius, because we all do if we're bullish. The stock has fallen dramatically. It's so freaking cheap. The original Celsius brand is struggling. Management cut too deeply. They admitted that themselves. Investors have now lost confidence, and Russ clearly knows the energy drink industry. But replacing the entire management team after one brand quarter is probably not automatically the right decision, because the CEO has been there forever. And when Celsius was a much smaller company under his leadership, Celsius grew from roughly 52 million in annual revenue in 2018 to approximately 2.5 billion in 2025. He literally saved this company as well. But success breeds hubris, so we still got to watch him, right? The current management is the one that secured the PepsiCo distribution partnership, expanded internationally, acquired Alani Nu, and they did transform Celsius from one brand in the portfolio to a company that is now third in the energy drink sector in America. And that track record does matter. The CEO absolutely does deserve criticism. CEOs always deserve criticism for the current execution of issues, but I would rather see Russ's experience used to improve the company, particularly the Rockstar turnaround part, than assume that people who built Celsius into what it is have nothing left to offer. Management has earned some time, not unlimited time, but one quarter does not make a company. So what I would like to see is for them all to work together to make Celsius the #1 drink company. We got to take out Monster first, and then we're going to come for Red Bull, right? Okay, let's talk margins, because this is another major concern in the earnings report, and this actually really matters. Gross margins declined to 48.1%. That's not great. Management blamed heavier promotions, channel mix, and commodity inflation, particularly with aluminum. They always have answers to these things. Adjusted EBITDA fell 12% to 184 million, even though revenue grew 11%. And that tells us that the additional revenue was not as profitable as investors expected or investors wanted. And there is some operating leverage lower down in the income statement if you're to look at it. SG&A was essentially flat in dollars while revenue increased, and SG&A fell from 32.2% to 29% of revenue. But gross margin pressure overwhelmed much of that improvement, which is super unfortunate. Management does expect the third quarter gross margin to remain in the high 40s. The bull case does require margins to begin recovering as the integration benefits become visible. If promotions remain elevated and margins stay stuck in the high 40s, the earnings power of this business is going to be lower than what we want. It is also important to look at GAAP EPS. GAAP diluted EPS was 14 cents, while adjusted diluted EPS was 36 cents. The company's reconciliation removes items including distributor termination costs and the certain acquisitions, integration, and legal expenses. Those costs may not represent the long-term earnings power of the finished portfolio, but they're still real costs for the company. I would use adjusted earnings to understand the underlying business while still watching whether those supposedly temporary adjustments actually disappear. The bearish argument after all of this is pretty straightforward. The original Celsius brand may have reached maturity. The company is using promotions to protect sales. Alani is covering the decline of the flagship brand, and Rockstar is another fading consumer brand that may never recover. Turnarounds are tough, especially in brands. Consumer brands often grow rapidly, fill the available shelf space, and then they slow dramatically. And that is a legitimate risk for Celsius. But I think the market may be missing the difference between slowing single brand and a scaled beverage platform. Because Celsius Holdings now has two brands with nearly equal market share with very different customers, right? Because Celsius is male and female, Alani is mostly female. And then if Rockstar does turn around, it's mostly male. But Alani is the younger, flavor-driven brand with the heavily female customer base. And that demographic matters. And then, of course, we can talk about the international expansion, which remains small, but it did grow 10% this quarter and 32% in the first half of the year. Management does believe that markets outside the United States can eventually represent 15% of revenue, which would be huge for the company. But none of that means that Celsius is going to become an automatic multi-bagger. And let's be honest, the optimism for Celsius has dramatically been reset now. So, did this quarter break my Celsius thesis? I'm going to say I was pretty upset when it came out because it's taking a long time, and I fear that management isn't leaning into Alani or admitting what Alani is for the company. So it definitely weakened my bullish thesis. My bullish thesis was never on the Celsius brand. It was always on Alani. In fact, I really wanted to love Celsius prior to the acquisition. And I said numerous times to my husband, I just can't buy Celsius because Alani's coming for it. I could see Alani growing. And when they acquired Alani for $1 billion, that was I'm in. That's it. Celsius is going to go crazy. But I really hope that management, I know the CEO knows Alani's amazing. I just really hope they realize that Alani maybe, just maybe, might become the face of the company. And if they can realize that, then I think my bullish thesis can play out. Rockstar also has optional upside. I'm watching that one, but I'm really watching what they do with Alani, and I really need them to stop allowing the revenue to decline in Celsius. Let's just at least stabilize that. And margins obviously need to recover. So here are 4 things I'm going to be watching very carefully in the next 2 to 4 quarters. First, Celsius retail sales. Second, Alani. I want retail growth to remain strong. I want it to continue to have that chokehold on the demographic, and I'll be watching to see if management starts really understanding how powerful Alani is to their portfolio. Third, Rockstar. I want to see this turnaround a little bit. I'd like to see brand repackaging. And I would love to see them increase the caffeine content here, but that's not a make or break for me. And fourth, that gross margin does need to improve. Like, that's just it. It has to improve. If these four things can happen, I think Celsius Holdings will continue to have my heart, but it has to happen. I'll be watching it quarter after quarter because brands fall fast. And when they do, it's a dumpster fire. So for now, I kind of see it with like one struggling core brand, one exceptional brand, and one turnaround brand. This is no longer the hyper growth story that it was. It's just become a lot messier, which makes it a lot harder to keep on top of. But it may also make it more valuable. I'm still bullish. I'm just not as bullish as I was, but I am going to be watching this company and the management very closely. Is Celsius a broken growth story? Is Alani Nu enough to carry the entire company? And can they turn around Rockstar? We'll see. I would really like to see Russ become part of this company. I love the shakeup they just did in management. John deserves a little more time, but we need to be watching him very closely. If you enjoyed this breakdown of Celsius, if you can like and subscribe, compound everything, that really helps our channel, and I will see you next time.